Welcome back. The budget countdown has started. We are less than 30 minutes away from the budget speech. In the run-up to the budget speech on ET now we have a super power-packed market lined up for you. Some of the best in the business. Shankar Sharma, First Global, along with him Akash Prakash of Amansa, Raamdeo Agrawal of Motilal Oswal Securities, Sunil Singhania of Reliance Mutual Fund, and Adrian Mowat of JP Morgan. Akash, let me kickstart the discussion with you. What's your gut call? Good day, good budget?
Yeah, hopefully. I think Mr. Chidambaram, has a history of consistently, being market friendly. So I think expectations are high from him, but the markets are, leading up to the budget, the markets have been reasonably stable to slightly down. So I think there's a chance that he could surprise people positively. So I have my hopes high. I hope he'll do a job which will reassure investors, and I'm sure he will.
You're hopeful that he'll do a job that will reassure investors. Sunil Singhania, what is it that markets would like the finance minister to focus on in budget 2013? Should he try and put, give fresh impetus to growth, or should he get the fisc in shape?
See, I think it's a chicken and egg situation, but very clearly, the fiscal situation everyone knows, and from here on we can only improve upon it. But I think what we need is definitely a fresh impetus to growth. So whether it is giving some incentives, or also creating that environment where private entrepreneur capex starts to happen, I think that should be a major focus. And we are very, very sure that over the past few months, what we have seen in terms of the government policies and also the statements which we have been hearing are all directed towards ensuring a fine balance with a very, very clear focus on growth coming back.
Raamdeo, good morning to you once again. Raamdeo, what is your understanding? Do you think budget is more like a 100-point nifty event? Once the budget dust settles down, it will be back to square one, back to basics, and Indian markets will focus on global liquidity, earnings and oil?
The corporate bond market.
Announcements today, it's a very important day. I think I would focus on seeing how businesses are kind of unshackled, because all the magic of economy is being performed by the businesses, and somehow in last 2-3 years businesses have, domestic as well as global businesses, have found it very difficult to function. And I think every aspect of business, export, import, domestic, industrial, services, agriculture, everything must function very smoothly. And I think that should be the thrust of policy announcements, which will help the businesses perform better.
But I want to bring on board Adrian Mowat as well with the FII perspective. Adrian, in the last year's budget, GAR spooked the markets. Do you expect some focus this time around on sorting the taxation picture, on reviving investment demand and providing additional investment, especially incentives to capital markets?
Look, I think it's difficult for the budget in itself to promote investment spending by the government. But we could see actions so that some of the cash-rich public sector units, PSUs, increase their investment spending. And we could see incentives so that the private sector is encouraged to increase their investment spending.
Akash, from your client's perspective, how important is this year's budget? Because in general, the mood or the approach towards India has been rather constructive in the last 6 months. Do you think your clients will be tracking today's budget with a magnifying glass?
I mean, these are global investors, so they may not look at it with a magnifying glass, but clearly I think the positive sentiment with the finance minister has created in the last 6 months the sense that India is once again regaining a sense of purpose and moving ahead on policy action, understands its issues, and is not complacent. I think people look to further reaffirmation of that the finance minister is in control, they understand the problems, they're taking decisions which are required. And I think the point, I think one of the previous panelists, I think Raamdeo and Sunil also made, which is that I think this budget is really all about the investment climate. India has had a very vitiated investment climate, both largely for corporate India in the last 12 to 18 months or 24 months. There's some signs of improvement in the investment climate. Those signals and messages have to continue coming out of this government, that we're open for business. We recognize that private sector investment is what will drive the economy out of its funk right now. and we need to take the steps required to improve the investment climate and ease of doing business in India. So that is the cues I think he has to give. Is India open for business and an easier place to do business in compared to the last 12 to 18 months?
Sunil, increasingly budget has become an event that is not too relevant for sectors or stocks to start with. But what's your sense? What sectors do you think will broadly be at play today? Do you think energy is going to be one sector that's going to be definitely on the spotlight? There's talk of a duty on crude. Do you think the energy stocks will be in focus?
See, as you rightly said, I think earlier when there were huge changes in the duty structure, whether it was excise and custom, at that point of time, yes, the stock movement used to be very, very sharp, and the impact on the fundamentals and the profitability also used to be sharp. But now with import duty and custom duty and all the other duties being very, very low, I think a minute tweak here and there is at best going to cause a small movement, and they're also on a knee-jerk basis on some of the stocks. So I think it's going to be more viewed as a budget for the economy and more a macroeconomic and an overall kind of a thing rather than stock-specific budget. Yes, there might be some proposals which are slightly beneficial to some sectors and vice versa. But huge movements like 10-15 years back which you used to see definitely are not something which we expect.
Raamdeo, the consensus on the street is that finance minister will cut expenditure. If planned expenditure is reduced, that will have an impact on growth and that will hit consumption. So indirectly, do you think this is bad news for Indian markets, because the India romance is all about owning consumer names?
No, but I think the whole demand looks to be that investment expenditure has come down significantly, and that somehow they must spur, and aggregate growth in the economy has to be higher than what it is right now. So I wouldn't know the the split between consumption expenditure and investment expenditure, but I think what they would try to do is that maintain the current levels of consumption on increased GDP, but definitely give boost to the investments. So I think focus will be more on the increase in the investment rather than cutting the consumption.
Comment on that, Punitha, because there is this, there is this imperative need to tighten the fisc, which means that he'll have to cut down on expenditure, and that will mean lower growth. That will mean consumption demand will be under pressure.
So, two things to notice. If you looked at the economic survey in the last several years, despite the economy slowing down and the industry slowing down, what is interesting is that consumer discretionary spend actually has been going up. So, consumers have been spending more on discretionary items such as travel, investment in gold, and less so, of course, on durables. But consumption has not been affected as much as investment. So the focus really has to be on investment, and for that, while a number of steps have been taken prior to the budget, that some more steps will have to be taken in the budget to stimulate corporate investment, because that's sort of been the weakest link in the economic survey and on India's historical numbers. So I think corporate spending is more important. Consumption has not been affected as much as one would think. So I don't think that should be an area of concern.
Shankar Sharma, I know you will be the odd one out, and you always maintained that budget is not relevant for Indian markets. So let me ask you a market-dominated question. Budget, no budget, where are markets headed?
No, I want to be out of the consensus only from a limited point of view, which is that I don't know why we have a pre-budget television show, because we have no idea what he's going to do. We just keep shooting in the air and hoping that something will, come out right in terms of the 25 things we want him to do. So, I mean, it's really, I don't understand. It's a pure game of, Russian roulette that we keep playing, and there are very learned people on this panel.
You have not responded. I think we've lost him there. But Sunil Singhania, let me ask you the same question which I asked Shankar. Budget, no budget, Sunil, where are markets headed?
See, again, to give you a very roundabout answer and then come to straight to the point, I think we have our share of challenges, there is no doubt about it. But I think one good thing is that global liquidity is very, very, available in plenty, which is good news for India, because a lot of our problems get, impacted if the liquidity globally is tight. So to that extent, a very liberal liquidity scenario in the global markets, which is the case right now, is good for India. The challenges are there. We all know the challenges, but the challenges are only going to subside, with every passing day. So whether it's inflation, interest rates coming down, yes, we need some impetus in investments, whether it's through the budget or before or after it. But we will be positively inclined, notwithstanding the challenges. So we need to do a lot of right things. But if we realize it, which we have already seemed to have realized, and if we start taking steps, money is available in plenty globally to support us to regain our past growth story. So I think we will be more positively inclined, notwithstanding the challenges which we have been seeing over the last couple of years.
Shankar, last year you were positively inclined, but market insiders are telling me that you are negatively inclined this year. Why is that?
I don't think I've articulated a very negative view till date, but I don't know who these insiders are. But yeah, I mean, just go back to the last year budget, and I think it was a terrible budget by any standards on a sentiment basis because of GAR and Vodafone. But we all know how the markets did thereafter, which just goes to prove that budgets, really speaking, don't have a very lasting effect on markets. And we've had two dream budgets in the last 16, 17 years. Both of them have ended badly. One was Mr. Chidambaram's own budget in 1997. Within a month, the markets had tanked completely because of Sitaram Kesri withdrawing support. And then there was this gentleman called Yashwant Sinha, who I think was finance minister, for a few years, and he presented something that only he termed a dream budget, and we all know how that ended as well. So the fact of the matter is that my concern, if you want to talk about, I have no idea what he's going to do in the budget. My concern is really that there has been just too much talk by the media, the intelligentsia and everybody on the fiscal deficit, and Mr. Chidambaram is very driven by what the world thinks of him, and therefore he was out there meeting investors and all that. So he's going to simply focus on delivering a fiscal deficit which is in line with what has been promised, and also promised to have a 4.8% next year. My concern is that we are missing the big picture here, that India's story hinges on consumption spending largely, and to a moderate extent on investment spending. The consumption spending should not get hurt because of this excessive focus on the deficit. The investment part of it, I don't think corporate India can invest in infrastructure. I mean, that's been my view for the last many years, despite having sort of been met with a lot of skepticism whenever I've expressed that view, because infrastructure can never make money. It's a non-remunerative business wherein you cannot charge market rates to a poor country like India and hope to get those rates from the consumers. So you'll have to sell below cost. So the only way you can make money in infrastructure is by doing a lot of hanky-panky, like, building substandard airports and substandard roads and taking money on the side, which is what our promoters are good at doing. But legitimately speaking, infrastructure can never return more than its cost of capital. In fact, oftentimes it will return less than that. So only the government can actually invest in infrastructure. And India's problem is that each time the government decides to invest in infrastructure, that money is actually siphoned off.
Shankar, fair point. I want to bring Akash into the debate as well. Shankar, raised the one red flag, which is that too much of fiscal tightening could lead to pressure on consumption demand. But Akash, what else is the worst case scenario? I mean, what is it that could potentially happen in the budget that could break the back of the market?
No, I think if they decide to go with a structure, I think of tax heavily and spend heavily, in the sense that he decides that, as Shankar said, I think he's gone. The finance minister has gone on the road and effectively said that 5.3 the target for this year and 4.8 the target for the coming year are red lines in the sand. We will not go beyond that. If this is an election year coming, effectively the last budget before the election, if they decide they need to spend a lot of money on, let's say, the food subsidy bill or XYZ, and they can't bring other subsidies under control, but he insists on meeting the 4.8% fiscal deficit target, then he's going to have to raise tax significantly. So if he raises excise duties from 12 to 14, which some people have talked about that, if he puts a significant surcharge on income taxes, so if he goes into big tax, big spend, I think the market's not going to like that. I think the market would prefer, keeping tax rates stable, cutting exemptions, and being accurate and and controlled on the spending side. So if he goes very aggressively in raising revenue to use the revenue to spend on perceived subsidies and things of that sort, I think the market will not like that at all.
Raamdeo, what to your mind really could be the big idea from this budget? Because P. Chidambaram is known as a big idea man.
See, what I have been reading from chief economics, advisors, utterances, and even finance ministers, and I agree with that one problem which is absolutely non-negotiable to be sorted out in this budget. I mean, some utterances must be there, is the weakness of rupee or external sector. You have to do something to promote export and promote import substitution, because you can live with lower growth, you can live with lower jobs, you can live with higher inflation, but you cannot live, world will not allow you to function smoothly if your forex is not in order. And that's something they have to put in order big time. I mean, with $295 billion of reserve, you just cannot draw down the reserve to take care of the gap, and gap has reached to plus 5%. So I see some kind of emergency out there in external sector, and we must see the imprint of this particular SOS in the budget, and that's where I said you allow the business to be unshackled, they will solve the problem. But let's see what happens.
Sunil, this time around, there's a lot of expectation that the budget will focus on the capital market. The finance minister has been talking a lot about the need to revive the capital markets, get the retail investor back to the market. There's a lot of talk that the scope of the Rajiv Gandhi equity scheme is likely to be significantly widened. What are you expecting that will come from the budget for the capital markets?
I think you've hit the nail on the head. We have over the last few years seen retail investors just leave the capital markets left, right and center, and that basically has incentivized them to invest in debt sectors like real estate and gold. For capital formation, for multiplier effect, I think the retail investors have to be brought back to the market, whether it is by facilitating the regulations which have been tightened a lot over the last few years, or by incentivizing them through either the Rajiv Gandhi scheme or some other scheme. I think one thing we have to also realize is that the retail investors have to have a simplistic way of investing, and I think that is where the finance minister has been very vocal in saying that they will do everything to ensure that the retail investors come back into the market. I think we need a lot of domestic flows coming in. It saddens us that most of the good quality stocks are now owned by foreign investors, and retail investors have just lost the opportunity to participate in the next phase of the growth story of India, which hopefully should unveil soon. So we definitely expect, and going by the past experiences, specifically with the current finance minister, I think he realizes that capital markets are the backbone of any growth economy. We need foreign flows, we need domestic flows, we need capital to be provided to our companies to grow and create capacities, which will, as Raamdeo said, lead to more domestic supply and lead to some sort of a balance as far as the trade deficit is concerned, and also job creation. I think job creation becomes very, very important. For all these things, you need capital which is channelized in a multiplier effect kind of savings, which equity would be prominent among them. So we do expect some good measures, and we hope that the retail investors are incentivized enough to come back to the equity markets.
Akash, budget, no budget, off late, what's been your portfolio strategy? Because you have a decent exposure to consumer names, you're playing the India consumption theme indirectly via banks.
Yeah, you seem to know my portfolio better than I do. No, I think we have a different approach. We have a limited stock portfolio, 20-25 names. We are very stock specific. So, there's nothing specific, as I think Sunil also mentioned. I don't expect anything dramatic on a specific sector or company because of the budget. Thankfully, those days are gone, where with a stroke of a pen, somebody's fortunes can change dramatically. Hopefully, that doesn't happen. So, no, our portfolio is pretty. I don't think we expect to change it very dramatically because of the budget. As I said, I think the budget is all about intent, about signaling, about business climate, about reviving entrepreneurs and foreigners' confidence in India and policy making. So I don't think we're going to change our portfolio very, very significantly because of whatever comes in the budget.
Raamdeo, ITC, you have exposure there. Do you expect something on excise duty on cigarette and tobacco?
Yeah, if they want to still raise some more revenues, I think that's the most favorite place where they get very predictable increment in revenue. So I think there'll be some more kind of taxes out there, but not too punitive because they have been taxing them very high. I mean, it will just kill the goose otherwise. So maybe some modest increase in there.
Shankar, there's also going to be a lot of pressure on the government to raise revenues, and everyone thought that spectrum is this one commodity that will help the government fetch a lot of revenues, and that myth has now been shattered. What do you think can the government do in terms of revenue raising exercises, and as a result of that, what sectors do you think could be impacted? Because there's clearly talk of a duty on crude to start with.
Yeah, we have just the usual suspects. So obviously the spectrum thing was ruined by the Supreme Court through its judgment, regrettably so. And when you take policy making out of the hands of policy makers and leave it in the hands of courts, this is exactly what's going to happen. So that judgment was a travesty, to say the least, and that has impacted India's image as an FDI destination vastly. So the usual suspects, obviously, Raamdeo was saying the cigarette part, or we'll have talks on divestment, we'll have talks on duties on crude, etc. The real problem, really speaking, is that most of our revenues do come from direct and indirect taxation, and that would coming from the corporate sector. And the corporate sector is not looking good, and that is unfortunately a problem that is not necessarily the government's making. There's a problem of the making of the RBI, and Mr. Chidambaram cannot exert any control over RBI to tell them that please cut rates down to a level that makes Indian companies viable to compete with global companies who are dealing with interest rates who are at 1 or 2 or 3%, while our companies have trouble borrowing even at 10.5%, 11% in the domestic currency. So I think the real problem lies obviously in Bombay, not in Delhi. So I really have no big call on where the revenues are going to come from, but definitely given the pie chart of revenue contributions, it has to come from corporate India, and that is the real problem there. That slowed down because of the high hurdle rate of interest rates pegged by RBI. Totally unrealistic, totally unmerited.
Every time Shankar Sharma is on ET Now, Shankar, you give me specific buy, sell and hold recommendations. You've always obliged me with a big call. So do you want to share your big call with me before the budget, or you want to reserve it after the budget?
I don't think I share any big calls with you, save for the big macro calls. But that said, we'll discuss stocks a little bit after that, because I think everybody is more focused on what the FM is going to start speaking in just a few minutes. So let's just keep that for after the budget.
2.5 minutes to the budget speech. Hopefully it will start on time and there won't be any disruptions this time around. Akash Prakash, the RBI is also going to be closely watching this budget, really, because how aggressively it cuts rates through the course of this year could well be determined by the language and the tone of the budget speech. I know we obsess a lot about the tone of the RBI governor's speech, but the RBI is going to focus a lot on the budget speech as well. What's your sense? What is it that the RBI will watch out for carefully, and how much do you see RBI cutting rates through the course of this year?
No, I think the RBI has very clearly said they're focused on the fiscal deficit, they're focused on the current account deficit, and they're focused on the credibility of the government's fiscal consolidation program. So obviously, the FM and the RBI governor obviously have met. The RBI obviously, before the budget, obviously the RBI I think has a good sense of what's coming in the budget. So, and obviously, as Shankar would have pointed out, a lot of people expect the RBI to play its part, and if they're going to, the finance minister is going to meet his fiscal deficit targets and consolidate the fisc, that's obviously a bit of a headwind to growth. The only way to counteract that headwind is if the Reserve Bank were to go and cut rates to give some boost to growth and counteract the fiscal, the negative fiscal consolidation effects. So I think the RBI will cut hopefully at least 100 basis points through this year. I think the RBI has been very transparent what they want. You may agree or disagree, but they want the fiscal deficit to come down. They want the current account deficit to go down. And if those two, and obviously they're looking at inflation. The CPI is still double digits, WPI is down to 7 or whatever. So, I think the RBI knows what it needs to do. It's just a question of calibrating it and finding the right time and the pace of the slowing of the cutting of interest rates. But RBI cutting is important in the context that the finance minister seems very determined to keep the fiscal deficit at 4.8 or whatever number or lower for financial year 14. So that's obviously going to create a headwind for growth because of cutting of government spending and fiscal consolidation. The RBI has to play its part by cutting rates, which I think they will. So 100 basis points for the year I think is very doable, if not more. And I think they're on the same page. I think the government and the RBI are on the same page on this one.
Gentlemen, stay with us. Markets, how are things stacked up minutes before the budget speech? Markets are looking strong into the run-up to the budget speech. Nifty in last two trading sessions has already appreciated by about 100 points plus. This could be short covering. Bear in mind that today the budget day is also coinciding with the FNO expiry. Expiry day is always a volatile day, and because today we have the union budget, for rest of the day we could see a lot of back and forth action. Historically, on the budget day, Nifty has always exhibited a swing of nearly 3.5%. I'm sharing the last 10 average with you. So for the day, my guess is that we will overshoot that average, 3.5%. So for the day, a lot of volatility.
Expect a lot of volatility. Purita, quick word from you. You know, the rally that we've seen play out on equity markets has largely been FI driven. If the FM manages to satisfy the FI community as far as the fiscal deficit number is concerned, do you think there's no threat to FI flows?
No, I don't think so. I think FII flows have come largely because, India had a very poor 2011 and we've seen outflows. So that's been one shift. But I think right now there's so much uncertainty in the global economies. People are focused on the US fiscal deficit issue. People are focused on the Italian issue. So I think there is a lot of uncertainty, and India is just one more country that foreign investors have to look at and evaluate versus opportunities elsewhere. So if he does stimulate growth more than managing the fiscal deficit, then of course that means people will be more comfortable and less to worry. One event will be over, and therefore the money could be, continue to stay while they continue to deal with problems in other markets. Right. So I think that's important to watch.
I think we're in all readiness for the finance minister to present the budget speech. It should kickstart in probably seconds from now. Swami, I want to throw it to you. Your last comment before we cut across live to the FM speech.
I would say it's a good time to be a bull.
Good time to be a bull, Swami. Haven't heard that comment from you in a long, long time.
He's ready.
Swami?
Well, as they say, there's a time when an idea says it's time for that idea.
So let me just, okay, the finance minister has started. Let's go across to the parliament.
I recall my last tenure as finance minister.